Hello, everybody, and welcome to the next in the series of RIABU podcasts. RIABU, be first in line to get paid. And I'm delighted that today I have with me in the studio Tim Charlton. We're going to hear from him in a minute. Bear in mind the pressures that are going on in the world at the moment, particularly if you're a small or medium-sized enterprise. There are all kinds of issues that you're having to deal with, and one of them, of course, is getting paid on time. So remember, Let the Cash Flow, written by myself and Mark Lowdy, explains in very simple terms what you can do, whether you are an SME or a larger company, to get paid on time. Practical, sensible advice. In fact, Tim Charlton, welcome to the studio. It's great to see you. You were kind enough to write a very positive write-up of the book on the cover.
Well, Simon, I've known you for a long time, and in your consulting days, you've done a lot of great work with the largest companies on exactly this issue. So what you don't know isn't worth knowing, and you do have a way of simplifying things. So happy to do that and be here today to talk with you about it.
I'm delighted that you've managed to get out of Australia. For the first time in 2 years?
Yeah, first time in 2 years, back here to Singapore. Wonderful day here and good to be back.
It's a beautiful sunny day. For those of you who don't know, Tim Charlton's a bit of a media legend. Tim, can you tell us a little bit about your business?
I don't know about that, but we basically publish trade media. So we do the Singapore Business Review, Hong Kong Business, and some industry publications, Asian Banking and Finance, Insurance Asia, Retail Asia.
I think for all of which at one time or another I have actually written, although not recently.
Yeah, you have from time to time, that's right.
So I have to confess that, I think that's appropriate. So Singapore Business Review, for example, gets a very significant audience among finance and other C-level executives in Singapore?
Yeah, and the Asian Banking and Finance is a trade publication for bankers.
So if we focus in, I know that you have a very active website, and I know that your team and you write a lot about SME issues. So why don't we zero in on that at the moment? Before we went on air, we were talking a little bit about some of the challenges, because both you and I have SMEs, right?
Correct.
We both have clients who are SMEs, and we have SMEs that we have started ourselves. So let's talk a little bit about what kind of pressures are you seeing on SMEs at the moment?
Well, so I think at the moment, one of the pressures that we've noticed increase a lot over the last 2 years would be a compliance pressure. So the sales team does a deal with a client, that's fine, the deal gets done, and then comes the collections. And the problem is we send the invoice in, and then there'll be a compliance issue. Oh, you need to fill out this document that says you don't do business with sanctioned countries or sanctioned individuals. I once filled out a 30-page document. Even my own internal team didn't know how to answer.
Who are you selling to, Tim?
Very simple companies, but they have a one vendor policy that covers everything. You know, this was a large American tech company. We have things where, you know, the company that we're selling to wants to ensure that the bank account is related to our company to make sure funds aren't siphoned off to the wrong account. But to do that, I have to get a letter from the bank saying that my company has this particular bank account. I was in Australia. The bank can't do that without me coming into a branch. It can't be done online. So there's just all these extra things that add a lot of time. On the business owner, I can't even outsource that to my accountant to do.
It's good that you're wise to these things, because Mark and I, my co-author, we talk a lot about this issue that very often, you know, you run a small business, you think, oh, I've got some business, that's fantastic. And you rush off to do the business, whatever it is, to sell the advertising or deliver the consulting, without perhaps paying enough attention to dotting the I's and crossing the T's when it comes to getting paid. And one of the things that we say in the book is, if you don't collect all that information, however enthusiastic you are to get on with the job, there's a good probability that payment might be delayed.
Yeah, and I don't know that it's deliberate by these companies, but what I would say is I'm not going to ask the sales team to hold up on doing a deal with a client.
No.
But then it doesn't get to the accounts team until they need to invoice it, and that's when the problems begin.
I think the question of deliberate is a very interesting one. I mean, I think if it's a small company, then possibly not. But, you know, you mentioned that I have, for my sins, spent a part of my life as being a management consultant, in fact, a good many decades. And one of the things that consultants routinely advise large companies, if we're honest, is they advise them how to make their payables process as Byzantine as possible. You know, in other words, and we talked earlier about what if it's an Australian company that you're selling to, but they actually pay the invoice out of India, and there are various T's that you've got to cross and I's that you've got to dot. There's quite a lot of that going on.
Yeah, not to point fingers at particular countries, but there's definitely a case where multinational corporations will try and outsource accounts payable to a lower cost location. And that brings its own set of challenges. When you call them, there's no answers. This was even before COVID. You email them, slow responses. This person's on holiday, they have to authorize it. And you go back to your client with whom you have a good relationship and say, look, come on, you know, it's been like 120 days here, we've done the work, can we please get paid? They're like, well, nothing I can do. Our company's processes is all done in a back office country, so it can get quite frustrating.
I've been there many times, and if you're running a fairly small company and you don't have the benefit of a cushion of enormous amounts of cash, as some multinationals do, that can be a very frustrating process. Let's talk a little bit, let's rewind a little bit, Tim, if I may, because before we came on air, we were talking about some of the cost pressures that small businesses are feeling at the moment based on the inflation that's going on and the fact that we just heard that the Fed's going to increase interest rates 4 times next year and so on and so forth. Can you talk a little bit about that? Are you seeing that in your business?
Yes, let's talk about that. Now, I'm not sure yet how the cost inflation pressures are going to affect my ability to collect the money from the clients, but it may. But what I can say is that whatever the headline inflation figures you see is not what I'm seeing reflected in the cost of my goods. My printing bill is up 15%, for example. All the subscriptions to all the online services we need to run a business are increasing at more than the 4% or 5% or 7%. So the difficulty comes in when we try and increase the pricing with our clients, which we're just starting to do this year because this is all new. There's a bit of pushback, and they say, well, look, it's still COVID times, business is tough. And I guess they're always going to say that, but it's a question of trying to increase the pricing to the clients and them accepting that.
Particularly in a competitive market where they have a choice as to where they go, I guess.
Yeah, that's right. And we're not a utility. It's not like, well, if you don't pay our 10% increase in power prices, the lights are off. So there's always that kind of client relationship issue that you have to take into account when price setting. Luckily, wages are not going up in double digits at the moment, but who knows if that's going to feed through in 6, 12, 18 months' time.
So the first things that businesses have to do is they have to keep the lights on and they have to pay the salaries, or they don't have a business. But they also need to do other things like invest in growth and new capabilities and all those kinds of things. And very often, surprisingly often, businesses have a big chunk of money in overdue receivables. That's money that they should have been paid but haven't been paid. And one of the things that we talked about a lot during these RIABU interviews is the fact that having access to large amounts of relatively cheap money, which, as we know, you and I talked about this many times. In fact, about 5 years ago, I wrote an article saying, that this was bound to come to an end, and free money was over, and all those kind of things. Only now, 5 years later, has The Economist actually written an article saying exactly that, which is that the Fed's going to raise interest rates 4 times. So, I guess it's a good time really to try and capitalise on that receivables asset if you possibly can. It's possible. I mean, I don't know how much you see about this, but I've been looking at Australia. The government's been helping SMEs in Australia to some degree, and it's created a code where anyone who buys from the government has to pay them within a certain period of time. It's done other things. But is it a good time to be an SME, or are we going to see record levels of insolvency in 2022? What do you think?
I can only speak from our experience. I don't see in the general economy anything particularly bad at the moment. Rates have been at record lows. I think it's always a good time to be in business. If you're in business, that's always.
I had a 15% mortgage 35 years ago.
Yeah.
Just to bear it. People here today would find that astonishing, but that used to be quite normal.
And I think the reality is that probably there's going to be inflation running at higher than the interest rates rise. But for that very reason, people just can't afford. Governments can't afford for the interest rates to rise too high. I think some industries are going to be affected more. The real estate developers are very heavy leveraged, and they may have to cut back, and they may slow down on those sorts of payments. Other industries may be better. Who knows how far it's going to go? But it was pointed out to me yesterday that not every country is raising rates. The Japanese aren't raising rates, for example. So you might see in certain industries where companies that are based in a currency that having rates rising are less active, and companies who come from a country with a stable, low interest rate funding environment may step into that space, especially here in Asia.
There are many countries in Asia that have a far from stable environment, whichever way you look at it. So for those of us that want to expand regionally, and many of the SMEs that I know are looking to expand regionally, it's going to be volatile. It's going to be difficult. On the general topic of getting paid on time, one of the things that some governments have done, including the Australian government and the British government, is create a code for large MNCs to sign up to, which requires that they pay smaller companies within a certain period of time. One of the curious things about this is I'll leave Australia alone since you've just come from there and we don't want to frighten you and send you back again, is that the UK government about 3 years ago got a whole load of multinationals to sign up to paying SMEs in 30 days. And then within a couple of months, they were publishing a defaulters list. And many of the largest multinationals that you and I know very well, and I won't mention them here for fear of being sued, were on that list. So is it possible that what we had here was we had virtue signaling from the marketing and PR department on the one hand, and then reality kicking in from the Treasury and Finance department, who said, we are not going to pay all our SME suppliers in 30 days, which is the pledge that they signed up to, because if we did, our cash flow would do this and our share price would do that. What do you think?
I think governments are always going to be wanting to try and help, but the market reality is what it is. I mean, in our industry, the media and advertising, it's quite, I mean, we'd never get 30 days. It's quite common 90 days, I say, would be about average. And we know a lot of that is us sending the invoice maybe a few days late. You know, I mean, I would even say, how quickly from delivering are we sending that invoice? There's a few days
Prompt
late.
and accurate invoicing. That's the second part of the virtuous revenue cycle.
And then when the invoice goes out, maybe it missed their cut-off, and maybe they do a monthly cut-off or fortnightly. So you've got to wait for them to assess it at the next cut-off. And then once they assess it, they'll give it a 45-day payment terms. But by the time you add all of that up, it's 60 at a bare minimum, more likely 90. And I don't know how much governments can really affect these sorts of internal processes as well of companies to make it 30 days. That seems like a very fast payment cycle.
Well, one of the things that we've done at RIABU, apart from our book and our website, which gives SMEs a whole load of resources helping them to figure out how soon they can get paid and what they need to do to improve their receivables collections, do check it out. We've created something called Pledge to Pay, where large companies are invited to sign up to pledge to pay I think you mentioned it actually in your magazine quite a long time ago. It was about a year ago that we launched this, to pay SMEs within 30 days. And we've had some quite big ones sign up, although some of their behaviors have been quite interesting. We don't track them because we don't want to have fights with them. So we're encouraging big companies to pay SMEs in 30 days because we think that's the right thing to do. So are we taking a rather absurdly positive view of what multinationals will do or how they want to behave, do you think, Tim?
I think multinationals are probably better, in my experience, than what they used to be 10, 20 years ago. I can't believe I'm that old in business. I think they're a little bit better because I think the technology has improved those processes. So, look, even if they virtue signal that they want to get the payments terms tighter, you know, at least it's going to follow through with some concrete actions on their behalf. I mean, one other thing that to look at is, as interest rates rise, there's more of a benefit for a company to withhold payment because they can make a margin on that. If you're getting paid 0% on your US dollars in the bank, you're only dealing with a cash flow issue to pay your suppliers within 30 days. But if a company can get 3% on their US dollars or 5%, I think, well, gee, if I just withhold by another 30 days, they can actually make a turn on that cash.
There's no doubt.
That's the disincentive.
There's no doubt that companies perceive it as being in their interest to hang on to their money. I think the point that we argue in the book is that most people have a positive view of themselves. So what they do is they take opportunities that you give them as their supplier to pay you late, which is, you know, for example, not having all the information that you need to get your invoice paid or missing detail or something like that. Not many companies will openly say we're deliberately paying you late. You know, they'll generally find a reason to do it. So part of the answer is to take away that reason. This is really very interesting. And, you know, for us this year, we believe, first of all, that there's going to be a lot of insolvency pressure on SMEs. You may be aware that 70% of SMEs who have borrowed money in Singapore have got that money secured on a primary residence, either of the owner of the company or the relative of the owner of the company. So the consequence of SMEs becoming illiquid, you know, could be quite severe. So I think there's a question mark over whether that's going to happen. What we say is we don't want it to happen. We want you to get paid on time. Yeah.
Well, I think what I've noticed with the banks in Singapore, especially, and it's different in Australia, but I've spoken to a lot of Singapore bankers. When we had the GFC crisis, what they did was a lot of loans in Singapore, the business loans are done on usually like a 4-year term. And the banks actually, one that I spoke to, looked proactively at the cash flows of the businesses and ran the algorithms. And businesses where they could see the cash was dwindling during that previous crisis, they actually called them up and said, hey, you know, we know it's tough. You're already 2 years into repaying the 4-year loan. Maybe it was for fit out of the office or whatever. Do you want us to extend the 2 years remaining back out to another 4 years so your payments are halved? And I think Singapore bankers anyway are quite flexible on extending terms of loans to ensure the serviceability, to not see those debts rise and insolvencies in a bad business cycle.
And I think, you know, the Singapore government's played a very positive role in supporting SMEs, including, for example, increasing the percentage of loans that it insures. I think it insures something like 70% of most small business loans against the risk of default, which is fantastic. Tim, there are a million things I'd love to talk to you about, but perhaps, given your experience, I could ask you to think about what other advice would you give to somebody with an SME who wants to ensure that their cash flow is positive?
One of the biggest things that we did, and you talk in your book about really looking at your processes, and I think that's really important. So previously, we would just send out the invoices and hope for the best. Now when as we all do, now when we send the invoices, our accounts receivable person chases, and we just ask, look, can you give us an indication, not a promise, indication when you're likely to pay? And we jot that down. And then we start calling them up on there when they told us they were likely to pay. And I think that's better than just sending the invoice and then chasing when you're going to pay it, has it been paid. It's better to ask, what's your estimation here? Because you can give a company your terms, but that's not how their accounting department works. And it's best to ask them first so you have a realistic expectation as to when you're going to get paid. And also, then if something's gone catastrophically wrong, because they say, look, our company here, honestly, we do 60 days at the end of the month after you receive the invoice. Well, you jot that down. No point in trying to do it. But if they haven't paid by then there's a problem.
I think that's really good advice. And I think I'm going to say one of the things that those of us who do struggle with receivables and who have SMEs or other companies, RIABU is very soon going to provide a benchmark of how long it takes companies in Singapore to get paid, companies of every size. So if you want to check how long it's taking your competitors to get paid, or how long it's taking your customers to pay other suppliers, then come to RIABU and we can provide you with that hard data, which gives you an opportunity to figure out just what your payment terms should be. So, Tim Charlton, it's been absolutely great to see you. I hope you're going to stay around in Singapore for a while, or are you?
I'm going to be here for a while. I think there's not a lot of, what do they call them, vaccinated travel lane places I can go. I think Korea, but it's cold this time of the year. So
you managed to avoid getting COVID?
Don't say that, touch wood.
Well, it's good to see you healthy. It's good to see you in Singapore, Tim. Thank you very much.
Thank you, Simon.
I'm supposed to go to that camera, aren't I? Sorry. So there we have it. Tim Charlton, a vastly experienced writer and entrepreneur, giving you good advice on how to get paid on time. Do check out Let the Cash Flow, which Tim very kindly endorsed. If you want to get more cash out of your receivables this year, deal with potentially the spectacle of increased interest rates and other instabilities in the market, including increased costs. Check out RIABU. Thank you.